Vermont health insurance premiums. What you need to know for 2026. Vermonters are on the brink of a health insurance crisis as two major insurers propose drastic changes to 2026 premium rates, sparking debates about affordability, solvency, and policy impacts. But here's where it gets controversial. While insurers argue for reduced hikes, critics warn these cuts might not be enough to prevent a collapse in coverage for thousands of residents. Let's break down what's at stake and why this could reshape the state's healthcare landscape for years to come. For 3 years, Vermonters have grappled with double-digit insurance premium surges. Now, Blue Cross Blue Shield of Vermont, BCBS, and MVP, the state's only two insurers, are requesting smaller increases for 2026 plans. BCBS initially sought a 23.5% hike for individual plans and 13.5% for small groups, but revised its proposal to 15.1% and 7.4% after pressure from regulators. MVP, meanwhile, trimmed its requests even further, asking for just 2.9% and 2.8% increases for small groups and individuals, respectively. The Green Mountain Care Board, Vermont's healthcare watchdog, is now evaluating these proposals to balance insurer solvency with consumer affordability. The stakes are high. BCBS is reeling from a $62 million deficit in 2024, driven by soaring claim costs. Its chief actuary, Martine Lemieux, cited a new state law, Act 55, which caps outpatient drug prices as a potential lifeline. However, the company warned that without higher premiums, it risks insolvency. MVP, though projecting a 2025 profit, still faces losses in its Vermont small group plans. This financial tug-of-war raises a critical question. Should Vermonters subsidize insurers' recovery, or is it time for systemic healthcare reform? The ripple effects extend beyond Vermont's borders. Federal tax credits, which help many buy marketplace plans, are tied to the lowest cost insurers' rates. If MVP's cuts are approved, Blue Cross customers could see larger premium gaps, straining subsidies for those just above income thresholds. Grace Powers, a 27-year-old who relies on enhanced tax credits for surgery, warned that losing coverage would force her to depend on emergency rooms for care. Her story underscores a bitter truth. For many, health insurance isn't a luxury, it's a lifeline. New state laws aim to curb costs. Act 55 targets high drug prices, while Act 68 introduces reference-based pricing to rein in hospital bills. Yet critics argue these measures lack teeth. BCBS attorney Bridget Assay cautioned that rejecting rate increases could destabilize the market, while consumer advocate Charles Becker called the 7% reserve contributions for BCBS unthinkable for policyholders. The debate boils down with a simple but divisive question. Should insurers prioritize rebuilding reserves, or should Vermonters see immediate release? As the board reviews data, one thing is clear. The system is broken. With 45,000 Vermonters protected to lose coverage under Trump's recent tax bill, and enhanced subsidies set to expire, the pressure is mounting. Governor Phil Scott's recent appointments to the Green Mountain Care Board, including ex-BCBS lobbyist Sarah Teachout, have added another layer of scrutiny. Will these changes lead to meaningful savings, or just delay the inevitable collapse? The final decision hinges on balancing risks. Board Chair Owen Foster acknowledged that past efforts to cut costs have yielded $0 of savings, demanding accountability over empty promises. Vermonters like Melissa from Westfield, who pays $1,500 monthly for a $14,000 deductible, are watching closely. Their voices and their health depend on it. So, do you think these rate adjustments will truly help, or just delay the next crisis? Share your thoughts below. After all, the future of Vermont's healthcare isn't just a policy debate. It's a fight for survival. Vermont healthcare crisis. Can you afford the rising costs? BCBS rate hikes explained. Healthcare costs in Vermont have reached a breaking point. Families, individuals, and businesses are struggling to keep up. Imagine opening your health insurance renewal notice only to discover another massive rate hike. That's the reality Vermonters face today, and the numbers are raising serious questions. Is this sustainable, or are we being pushed past the limit? But here's where it gets controversial. Blue Cross Blue Shield of Vermont, BCBS, facing financial challenges, is now seeking substantial premium increases for the coming year, 23.3% for individual plans and 13.7% for small group plans. And this comes after several years of double-digit hikes already. Let's break down the trend. BCBS has raised premiums for individual and small group plans year after year. In 2023, rates increased by 11.4% individual and 11.7% small group. In 2024, they jumped again by 14% and 13.3%. For 2025, the rise was 19.8% for individuals and a staggering 22.8% for small groups. Now, for 2026, BCBS is requesting another round. Rates could surge by 23.3% for individual plans and 13.7% for small groups. And this is the part most people miss. The Green Mountain Care Board, GMCB, which regulates health insurance rates, has acknowledged with BCBS that the requested increase to be brought down substantially to just 5%. If the state finds a way to trim healthcare spending by about $200 million, lowers hospital commercial prices, or combines both measures. This sounds promising, right? But hospital leaders quickly push back, arguing that any drop in their revenue would mean cuts to staffing levels or important patient services. Here's where it gets complicated and even a bit controversial. Hospitals have long maintained that reducing their costs would directly harm patient care. Yet recent evidence suggests there are alternative areas for cost reduction without impacting patients at all. Think about the money spent on public relations campaigns, lobbying efforts, executive compensation packages, administrative layers, consultants, expansive capital projects, and even financial reserves. For instance, hospitals maintain sizable unrestricted cash, funds that could be used during challenging periods instead of slashing vital services. Consider this. The University of Vermont Medical Center, UVM Medical Center, and the broader UVM Health Network currently have over $1.1 billion in unrestricted cash available. According to GMCB Chair Owen Foster's testimony at a recent Vermont House hearing, these resources include cash on hand, short-term investments, and assets designated by their boards. In plain terms, that's a significant safety net, money the hospitals could choose to deploy, particularly in times of crisis. So, here's a provocative idea. If UVM Medical Center and the UVM Health Network wanted to make a real difference for Vermonters, they could allocate just $200 million of their unrestricted cash to offset BCBS requested rate hikes, potentially slashing the premium increase to 5%. Alternatively, if these hospitals could lower their own prices, especially considering UVM Medical Center has some of the highest hospital prices in the entire nation, which has directly fueled rising insurance premiums and BCBS financial struggles. You might be wondering, who actually holds the power to force meaningful change? The answer is the Green Mountain Care Board. This regulatory body can require hospitals to reduce their rates, which would have a direct effect on curbing the relentless rise of insurance premiums. As the crisis intensifies, do we need more incremental adjustments, or is it time for bold leadership that puts Vermonters first? Here's a question for you. Should hospitals tap into their reserves and possibly scale back executive perks and marketing to avoid cutting patient services and help lower premium increases? Or do you agree with hospital leaders who say any reduction in revenue necessarily harms patient care? Sound off in the comments. Do you think we need a radical new approach to healthcare costs in Vermont? Or is the system already being pushed too far? Let's talk about it. And don't worry. Every perspective is welcome. Affordable health insurance for VT small businesses. Challenges and solutions. Imagine living in one of the healthiest states in the nation, where nearly everyone has access to medical care. Yet small businesses are caught in a relentless struggle with soaring health insurance costs. This paradox is the reality of Vermont, a state celebrated for its robust health coverage, but plagued by an insurance market that's becoming increasingly unaffordable for its small enterprises. But here's where it gets controversial. Despite Vermont's commendable health statistics, the underlying issues contributing to the health insurance dilemma are complex and multifaceted, involving state and federal policies, demographic challenges, and more. There's no easy fix in sight, given the intricate web of laws, regulations, and bureaucratic hurdles that entangle the healthcare system. In this exploration, we delve into the reasons behind the escalating healthcare expenses and propose a policy shift aimed at leveling the playing field for small businesses. The stark reality is that the cost of health insurance has consistently topped the list of concerns for small businesses, according to the National Federation of Independent Business, NFIB. These businesses are in dire need of more options to provide affordable health benefits, a key factor in attracting and retaining talent. Shockingly, health insurance premiums in Vermont's state-regulated markets have skyrocketed, with individual market premiums seeing a staggering 153% increase from 2018 to 2025. The small group market isn't faring much better, with significant hikes in employee premiums as well. This surge in costs has led to a sharp decline in the number of small businesses able to offer health insurance, with Vermont experiencing one of the largest drops nationwide. And this is the part most people miss. The affordability crisis is worsening, with proposed premium increases for 2026 signaling more challenges ahead. Yet, there's a glimmer of hope, as recent legislative actions to curb hospital markups on specialty drugs have led to slightly lower rate increases than requested for large group rates. The question remains, why is health insurance so expensive in Vermont? The answer lies in a combination of high healthcare costs, driven by policy decisions, labor shortages, and the dominance of major hospital systems, particularly the University of Vermont Medical Center. Additionally, the shift from private to government health plans has put pressure on private insurance premiums, as Medicare and Medicaid reimburse at significantly lower rates. This dynamic forces providers to charge more to private plans, further inflating premiums. The growing burden of healthcare costs on small businesses and individuals raises critical questions about the sustainability of Vermont's health insurance market and the broader implications for access to affordable healthcare. What do you think? Can Vermont find a way to balance high-quality healthcare with affordability for small businesses? Let's discuss in the comments below.